It's time for the big three. We've got 3 stocks and 3 charts we're going to walk you through. Rick Ducat, of course, will be taking us through the charts and technicals. And here to take us through the picks for today, Jessica Inskip, the Director of Investor Research at stockbrokers.com. Great to have you both with us, as always. Jessica, let's start with you. We're seeing the markets under pressure today, with the potential of this government shutdown. What are some big picture thoughts you have as we move into tomorrow and some of the uncertainty?
Yeah, I think really it's a big concern if we're not going to get the jobs data, which means we're going to put heavier focus onto non-traditional forms of data, which would be ever so more important. But I was reading this morning in regards to the government shutdown, there's still some cash margins within Treasury, which would be the bigger concern if we weren't able to meet our obligations. And that doesn't seem to be too much of the issue. So if it inevitably does happen, I don't think the market will react as badly as anticipated. And if it does, that's certainly a buying opportunity. Because if we're talking about overvalued and trying to justify these high PE ratios that the market keeps consistently talking about, I argue that the S&P 500 and the market is not the same as it was before. We're still not, even though we're heavier technology, if we compare it to the dot-com bubble, it's not the acceleration that's moved, and PE ratios tend to be around 35 for the technology sector. So I even think there's still room for expansion.
All right, so room for expansion and buy the dip. With that, let's talk about your first pick. American Express also under some pressure with the broader market today, down about 2.75% right now. Why is this your first pick?
Well, I do know as we're looking at the economy and the consumer, there's some bifurcation showing up, and that's with the high-income consumer holding up a lot of what we see within the data. But American Express is a beneficiary of that. They have continued to prove its strength with the high-end consumer. There is this platinum refresh strategy that's driving retention, it's loyalty, and there's a revenue uplift there. Even though there's a short-term expense rise that's going to happen for that consumer, if we go through really past when they've raised that, the affluent consumer shows resilience and they remain well positioned to return long-term growth. When they've had platinum refreshes in the past, the attrition fell from 10.16 in 2021 versus 14.9% in 2019. So historically, those refreshes keep the customers more loyal. So it's going to be good, I think, really in the long term. And it's being taken very, very well across social media and forums that are talking about that. So I think any dip is a great opportunity to purchase some more American Express.
All right. So, Rick, as we've talked about that, I'm looking in the past 12 months up about 23% for Amex. What do the charts show us?
Yeah, so when we look at this one, it's been a period of strength for the most part in these financial companies here. I don't know anyone who doesn't have a credit card, to be honest with you, except maybe my dad is more cash-centric, but pretty much everyone uses these products here. So 326 was an old high, green line here, matching up with these double top type highs that we saw before this downward period here. Then the subsequent breakout took us above that level after a period of chop and consolidation. Now we are hanging on above that point, but we have another boundary to watch to the upside now. 342 or so, that was about the site of our best close. Our intraday highs went all the way up to 349, but now we have our big red candle. We're still near the lows of the day. We would be potentially trying to see if we can hold on to those old highs right about where we hit our lows so far for today. So an interesting development here if we were to break through that line and start to move lower once again. So when we look at RSI, our measure of momentum, we can see that we have seen some bearish divergence here. RSI trending downward, price going upward, a momentum mismatch, not exactly what you want to see. So far, it does seem like it's translated to this downward move here. But as I said, we're at this supportive level right now, so this could be a short-term make or break point here. We line up with our 21-day exponential moving average quite closely as well, near 332. If we were to consider our standard deviation channels and volume profiles, the small node developed up here near 340. We have crossed below our +1 channel. The next heavy trading area is just below 326, our green line. That's where things start to pick up once again. So look for further support near that area, potentially.
All right, and trading right around the rate just below the 333 mark right now for American Express. All right, Jessica, coming back to you, your next one, completely changing industries here over to CME Group. Why CME?
Yeah, so I don't know if you've noticed, but there is this big change that's happening within market infrastructure. And I see this next innovation, and it has a lot to do with tokenization and the blockchain. Now, back in March 2025, CME, they announced a move into tokenized assets. But as of yesterday, I saw another headline where they're actually talking with DTCC and cross-margining advancements. So I really think CME is pushing the boundaries of market innovation. I see event contracts becoming more popular within the retail space, and there's differences, and as we have this adoption from CFTCC and what's happening within places like CME. So I really think there is a strategic role here. They're pushing the boundaries of market innovation. There's futures expertise with tokenization across this margin advancements that could lower cost. It unlocks efficiency for end users, and it really cements CME's role as a pioneer in the next era of financial markets as we see this shift to tokenization and blockchain, quicker settlements, and I think CME just has great exposure to that if we layer on event contracts as well.
Well, thank you for highlighting that. We've certainly seen how being ahead of the curve can be beneficial for companies in the past. So, Rick, what is it telling us about CME Group?
Well, our hometown Chicago Mercantile Exchange here. So when we look at this chart, we can see that we are seeing lower highs and lower lows for the most part here. We started here 290.79, our intraday highs, connecting this attempt to break above here. I also was looking at this level because it was roughly our intraday highs that we experienced twice, and then we couldn't really make our way above 286. So now we have collapsed a bit here. 271 was another range low point that we broke below. We did make a series of lower lows, but seemed to stabilize around 258. Now we are once again climbing back above 271, our green line here, our old supportive area that then became resistance. So if we consider our momentum study here, RSI, a big leap to the upside here, breaking above the 50 midline and re-entering bullish territory here. Now when we see our moving averages overlaid as well, price has very quickly crossed above all of them once more here. Our three that we look at, 9, 21, 63 exponential moving averages here. So the trend is improving in the shorter term here. So now we can also see that the volume areas that really stand out for these heavy trading points here, this is about where we stabilize. The point of control near 262 lines up quite closely with our -1 standard deviation channel. Now we are entering the next heavy volume area here. So once we start to get above 275, that would be the point where the way is cleared to reattempt 281 and then 286 subsequently.
All right, Jessica, let's move to your third one here, your final trade, Spotify. Now, they had some news, shares down about 5% after the announcement that Daniel Ek is going to be stepping down as their CEO at the first of the year. Is that a part of this selection here?
That absolutely is. I think it's presenting a very good buying opportunity. First of all, if we dive into that news story, the CEO transition-induced sell-off, it looks more of a buying opportunity to me than a red flag because he's still going to remain on, and it's something that where the two that are taking over have been a part of this as well. So it's more of a soft handoff, and I think that his hand in that is very important. Now we've got to consider where Spotify is and their dominant force in global music streaming and the Taylor Swift effect. Let's not forget that. In 2023, we were talking about how Swiftonomics and her tour and even others were contributing to sticky services inflation, and we cannot underpin demand of a very large fan base, which Taylor Swift certainly has. So there are exclusive events that are happening within Spotify. They are a market share leader, and this is global. If we take out ex-China and Russia, they hold 45% of global paid music streaming market, and they're expanding as well. So last quarter, they authorized additional buybacks, but there is additional revenue streams that are going to contribute to positive free cash flow. And that's what I'm looking for with this growth opportunity and a clear path to profitability. And essentially with the partnerships that are happening with Taylor Swift and the release parties that are all around Spotify, I think will translate into earnings that we have not necessarily seen yet or talked about, because that's happening this weekend. I'm personally very excited. And of course, the growth in audiobooks and videos as well within Spotify, which is becoming more of a competition even with YouTube. So I think it's going to be interesting to see how that plays out. I think the CEO transition is well timed and well prepared, and this is a buying opportunity as margins expand. We see increased free cash flow and business revenue is diversified.
I am also a fellow Swiftie, so very excited there as well. And interestingly enough, this is the second CEO transition to a dual CEO conversion we've seen. Like in the past 10 days, we had Oracle announce they were also going to have co-CEOs, and you just don't see that too much. So interesting they came so close together here with Spotify also having two CEOs. But Rick, as we take a look at Spot's chart, what is it showing us?
Yeah, stuck again at a resistance ceiling here, 740, about where we topped out recently, about where we topped out 2 prior times. Actually more like 3 because we had this little downswing here. So you could say 4, quadruple top type price activity near 740. You could also draw a trend line starting with this notable low point, going through these lows as best you can here. Sorry, bit of a bad circle there. But where we connected here during our lows so far today, that's about where you might expect this trend line to start being breached here. That would open the door to 664. Old highs, low point, low point. That would be a key area to watch for if we were to break even lower in the coming days here. When we assess our momentum study here, RSI, we can see we are having a bit of a breakdown. Green trend line broken, red trend line in play, crossing below the 50 midline. Kind of the opposite situation of our last chart as well. This time we are crossing below all of our moving averages in a very quick succession here. The moving averages themselves are mostly in confluence right around 714, lines up pretty closely with that trend line. So another short-term area to watch that really sticks out. When we do consider volume profile, we are stuck right here near the very edge of this volume node near about 710, centered around that area. So, even more emphasis on this area if we do start to move above 720 or so. That's where things start to thin out. So overall, though, the broader range, 664 to 740, those are the rather clear areas that we seem to be finding a floor and a ceiling.
Trading just a little below that heavy volume range with that downward move on the CEO news, but year to date, shares still up almost 55%. I want to thank both of you for being with us, Jessica Inskip for the stock picks and Rick Ducat for walking us through all of the technicals. Thank you both again.